Day.
The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour. From Arizona to Pomona, from Angola to Hispaniola, from Annapolis to Minneapolis, we love to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
S&P off 17, well, maybe 18 points, 183 lower on the Dow, down 82 on the NASDAQ. Russell's off about 13, of course, giving back a little bit of what we had yesterday. Options expiration is one of those things where if you have kind of an up Wednesday, generally you have a pullback on Thursday, and then a retest at least of those highs on that Friday. So looking for a bump back up to the recent highs tomorrow. They don't always stick, but I'm going to say 80% of the time you at least get a retest. And let's do a little bit of the sit rep just so we can get into that. We got Tim Ord coming in on the next segment. So if you want to email me at path@tfnn.com, you can get the charts. I'll email them to you during the break. But we'll have him on for the next 2 seconds talking about what's going on in the markets, more of a long-term view than generally I have. Anyway, when we look at what I got through the numbers last night, it was they just went wide. Let me put it that way. I think that option market makers wanted nothing to do, either long or short, going into the jobs numbers. They must have been fried a few times before, and they just ran. They didn't want any real exposure or 100 points higher or 200 points lower in the S&Ps. I mean, they went wide. They weren't going to take any chances of any big movement. And, 0.5%, they probably gave away a lot. But that tells you how gun shy a lot of those market makers are right now. While we're starting to see a big decline, a large decline, let me put it that way, in puts and calls, but mostly puts, on everything the last couple of days. The short sell numbers continue to be rather large. So people shorting equities are much more prevalent and still very high, why a lot of the people that have been playing options have kind of gone off somewhere else to lick their wounds, I guess. More earnings tonight with Netflix. And, of course, we go right into tomorrow. And that will give us expiration. And we also have a few more earnings tomorrow morning, if I believe. Ally Financial, BlackRock, Ericsson, and probably the one that interests me the most is Kansas City Southern, KSU. And that will give us a little bit of a view of what's going on in the railroads. I think we got some more coming next week in the railroads, if we didn't have some already this week. And the question is just how scared is everybody going to be? Because everybody is saying boo every time you turn around, that the end is nigh. Generally, I want to take the other side of that trade. Also, kind of dealing with a bit of a headache today, and I'm not a real one, but kind of a psychic one. I had somebody, we were talking about tests in a hospital, and he told me, since I know the truth is not what he said that this test was 100% accurate. I said, well, in all the history of medicine, there hasn't been any test that's 100% accurate. And he said, yes, I saw it on the TV, so it's true. And that was the first thing that kind of made my head want to I wanted to wrap my head in duct tape. But I did. I ran away from him because he was either two things. He's a nice guy, but I can't imagine anybody believing that knew anything about medical tests would believe that they're 100% accurate. You've got false negatives and you've got false positives, and the truth is very hard to find. People believe that they know a lot more, I think, than they know. The other thing at lunch just drove me mad, and that was a young couple, probably in their 20s, zoomed by me on a motorcycle. No big deal. No helmets. Now they're doing about 70, maybe 75 and a 40. So what do you think actually made my head almost want to explode again? I'm going to have to go to the tape store and just buy it in the carton before my head explodes. They had their masks on, but they're doing 75 miles an hour in a 40, no helmets. I don't know how anybody does anybody really think about risk reward anymore? The chances of probably getting COVID while they're driving down at 75 miles an hour in a 40, probably pretty low. Probably much bigger chance they'd have an accident. So why wouldn't you put on a helmet and take off the mask? Anyway, that drove me nuts all through lunch. And of course, these things, they prey on you. They work on you. They eat at my brain. It's hard for me to see that kind of stuff and go, what were they thinking? But you never know. Let's do a little history and we'll move on.
And it's all just a little bit of history repeating.
On this day in 1969, America shows what it's got. America will show what it's got again. Nonetheless, of all the naysayers, and the end is nigh, folks. Of course, I always say that we don't have any negative waves on this show. But on this day, the Apollo 11 launched from Cape Kennedy, Florida, on the way to becoming the first space mission to land men on the moon. Of course, it's, 1971 or 2? The first couple of months of 1972 was the last time we were there. And we're getting to the point where we won't have anybody that was alive that was actually on the moon. It seems kind of tough. And it seems that as a young boy seeing all that stuff, seeing the Jetsons with the little car that went, I wanted a car. I still want a car. It goes, but you know what? No car. I kind of feel like we kind of gave up a little bit. Anyway, supposedly we're going to go back in 2024, but it just seems like two things. We didn't go very far. Once we had the excuse that you can do anything, we put a man on the moon, then literally no one had an excuse after that for anything else. But at the same time, we never went back to the moon. So, anyway, as I said, I want to wrap my head in duct tape before it explodes. We'll be back with Tim Ward to put a little reason in the markets. Maybe let my head just take a brief time. Be back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And we want to welcome to the microphones Tim Ord. Tim Ord has been a market timer with awards, number one in many different sectors since 1990, 1988, something like that. 30 some odd years.
A long time.
Long time. You get to see and been through a few rodeos. So this isn't your first one. One of the things I heard early on when I was trading was you kind of have to go through a few of these cycles to start learning. Well, we've got someone with an encyclopedic knowledge of reading charts for 30 years. And we want to welcome Tim Ord, author of The Secret Science of Price and Volume, kind of a Wyckoff trader, if I can call you that. And welcome to the show.
Be nice. Yeah, well, thank you. Thanks for having me on. So it's a pleasure to be on here again. You
would describe yourself as kind of a Wyckoff trader, wouldn't you?
Yeah, I mean, I've added to it anymore. I'm probably more of a climatic trader. You know, I use climatic type readings for bottoms and stuff. And Wyckoff never really did that. He's just more or less price and volume. But I look for extremes and, you know, panic and stuff for bottoms and for highs. I kind of use different stuff. Like we actually got one chart we can talk about today, was showing kind of extremes in sentiment. Doesn't really nail the exact top, but it gets you pretty close. But we can start talking about that if you want.
Well, I've got chart one up. Is that the one?
Yeah, it's the CBOE total put-call ratio readings, which is on that. It's the symbol CPC. And the only thing I'm showing here is anyway, we start at the bottom window. The bottom window is the equity put-call ratio readings, and this chart goes back to March. And it gets below 0.55. A lot of times you're near some sort of a high. When it gets above 0.8, you're usually near some pretty close to a low. Matter of fact, back at the March 23rd low, we were pretty much way above 0.8, if you can see that graph towards the right reading. And now we've been below 0.55 since the end of June. And, we ticked a little bit higher, but basically from, pretty much June 1st, we haven't really moved that much up. We're up a little bit, but not a lot. And probably one of the reasons why everybody's on the long side here, equity put call ratio readings when it's this low, that's pretty much means everybody's on the call side. And really, that's not the place to be. Normally, if everybody's on one side of the fence, you want to be on the other side. And that's what kind of helps you define where we are in the market. So that's the equity put call ratio readings on the bottom. If you go to the middle window, which is the total put call ratio readings, that includes the index put call ratio readings, the equity put call ratio readings, and you add that up and you get the total. And last time we're at 0.61 was the June 8th high. Red arrows pointing there. So we really haven't moved down any, but this is option expiration week, which normally has a bullish bias, so we may hold up. But sentiment-wise, which is what options are, they measure the sentiment of the public. This public usually are the ones long calls or long puts. And the public's extremely bullish here, so it's not a good sign. Doesn't say the top has to be today. And we can, flip sideways for months, if not, weeks, if not months. And maybe when these ratios back off, we can, move higher. But way right now is sentiment's way too bullish, both on the equities and on the total put call ratio readings. So,
do you look?
Go ahead.
I was just going to say, I noticed the same thing. The only problem I have is I look at a lot of the equity short positions, and they're pretty record. They're massive. It's just been the last few days, like your chart shows, that everybody's kind of given up on going with the big out of the money puts and calls, thinking we're going to get a lot of movement. But they're still hacking away every single day on the big stocks. That hasn't subsided, and we're probably, I'm going to say 10, 15% higher for the shorts numbers from the last reporting period. So you got kind of the, I think the faster money, if maybe you can tell me what you think, but the faster money in the options kind of wandering away, but the people still hammering away on the long-term view that the market's going lower with the equity shorts.
The market's going lower?
No, I'm saying that's what people think. They're shorting a lot of stocks, but they're using the equities instead of the options right now.
Okay, that could be. Also, I noticed I don't have the chart of it, but money flows out of the market has almost hit a record, and that's usually it's actually a bullish sign. When everybody exits, money flows are out of the market. Usually that's a stabilization of the market, which contradicts these put call ratio readings. This is kind of maybe we go into a real tight trading range because the money people are already, according to the money flows anyhow, people are already, the average Joe investor is already out of the market. And so, I mean, they pretty much sold. So, I don't know. It's kind of a weird reading here, but of all the times to invest in a year, the July through September is probably, actually it's the best time because usually you get down markets in this time frame. We haven't had a down market yet because the market's pretty much held up since the March. Well, it has held up since the March low. But this time from July until September, of all the months in a year, this is not the best time. If you're at the highs, it's not time to put money to work. If you're at a correction low, it's a really good time. So I'm thinking it could be a kind of a tough period going in here. And if we're going to get a 50% retracement of the rally from the March low, this time period from July till September is probably the time they'll do it. So I'm not really bullish here because of the sentiment readings, but I think longer term I'm fine. I think we're actually, once the lows are fine, are back in, and we do have a correction between July and possibly September, the market will work back higher again before year end, because actually this is election year. and usually you don't get really bad markets going into elections. So I think the market overall looks good, but over the next 3 months, you can see some consolidations. Anyhow, that's how I'm reading it.
Yeah, the other thing that I noticed, and maybe we can talk about it on the other side, we've got another chart to get to too, but we finally got the summation index has been kind of really slowly moving down, but it actually started ticking up in the last couple of days. But it had been kind of weaker, not as bad as it has been in the past, but maybe we'll talk about that when we come back from this short break with Tim Ord, author of The Secret Science of Price and Volume, and the ord-oracle.com is where you'll find him. Email me if you want his charts.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back with Tim Ord of the Ord Oracle. And do we want to go to chart 2 here?
Yeah, well, we could talk a little bit about that McCollum oscillator. I noticed yesterday it closed above zero. So usually when it's above zero, the market's considered an uptrend. When it's below zero, it's considered a downtrend. So we did get back above zero yesterday, and the Vance Klein line today is not a little bit negative, but it'll probably still be above zero. So also, this is option expiration week, but today's a quiet day. probably some fireworks tomorrow would be my guess. It's right before the storm, I think. So with McCall and Oscar above zero, I bet we'd take a shot at yesterday's high. That's what I'm thinking on a short-term basis. So I was kind of looking at some call options, SPYs for tomorrow, just for a
lottery ticket.
Lottery ticket, right? So, but anyhow, we'll see. But yeah, we can jump to the next chart.
Okay.
Anyhow, that's the VIX on the upper window, and below that's the SPYs. And VIX in general trades opposite of the SPYs or SPX. So if the market's going up, the VIX is going down, and if the market's going down, the VIX is going up. And what I look for is divergence. If you notice at the June high, actually the day before the high, VIX started to go up, and now we're back matching the previous highs of June on the SPYs. And if you notice, the VIX is making higher lows. That's usually a divergence. If it was a bullish situation going on here, the VIX would be down below the what looks like about June 7th low, and since we're above it, that's kind of a bearish view. So I pointed that out in my market letter. And also, if you notice, I got a Bollinger Band on the VIX, and the VIX, it's not a big pinch, but when it starts pinching like that, that normally means volatility is going to be coming into the market. So maybe this week won't be much, but in the coming days, volatility probably is going to be starting to pick up because of the Bollinger Band starting to pinch on the VIX. In other words, the VIX is going to make a move. It could be down, could be up. I didn't tell you what direction, but the sideways movement we've been going on since basically around June 1st, we're going to break out of that trading range, and volatility is going to be increasing in the market. So I'm thinking we may go back up, try to get through that June 8th high, and probably a failure would be my opinion. And then we come back down, maybe back to the bottom of the trading range, which is, June 11th low, wherever that is. So but volatility is going to definitely be picking up here short term. Not necessarily today, but if not tomorrow, next week sometime. So it'll be interesting what will be coming down the pike here short term. So
we have a lot of earnings next week. We've had a few. Got Netflix after the bell tonight, so it may move a little bit into tomorrow. But the ones that are probably really going to drive the indexes are all reporting next week. So volatility
at the minute. Whatever.
What's that?
The FANG stocks, a
lot of them the next
Facebook.
The next 2 weeks are going to be pretty. Did I have this up here? Yeah. When we get into next week, let's see, where does it end? Let's see, I have it here. Yeah, Snap, but a lot of the other ones, iRobot, a lot of the really volatile stocks. But Tesla next week, Microsoft, IBM, Chipotle, all the ones that they talk on the CNBC about a great deal. And so, I think you can bet on volatility next week. I just, like you said, hard to tell exactly which way that volatility is going to go. But
right.
When you're looking at these Bollinger Bands, which are basically one standard deviation out of the actual, what is it, like a 10-day or something moving average, or 20-day?
It's a 20-day moving average. I think it's 2 standard deviations beyond the norm. So that's what I'm thinking. It's been a while, but I think it's a 20-day moving average with 2 standard deviations for the upper and lower Bollinger Bands. So it's kind of a hard read, but all you know is prices are going to increase or decrease significantly what they have done over the last 2 weeks, and with the equity put call ratio readings and actually the index put call ratio readings are pretty much, they're all betting on the upside. It may be kind of a head fake, a minor break up one day above the previous highs, and the whole thing comes back down again. But is kind of a tough call right here. I'm still thinking just because of the seasonality period, of July through September, this is probably not where a trend's going to start up. I think it's probably the market needs to consolidate down again to get some energy and get rid of this sentiment on the bullish side so much. And, correction would help get the public back, at least instead of, frothing at the mouth on the bullish side, get it back more to the neutral side where a rally, I think, can happen, starting maybe in September all the way into, the election. That's what I'm thinking. But I don't see definitely a sell signal here yet. So
I wanted to get into one thing, which is we're starting to see a lot of the pumps and dumps that kind of outlined 1999 into 2000. Do you kind of remember exactly how long all that lasted? Or have you forgotten it like me?
Actually, I caught that 2000 top. I remember what happened going into that top. I remember it very well. It was the market kind of just chattered up in a upsloping triangle pattern. It was it was an upsloping wedge, and
that was like 6 months, wasn't it?
Edwards McGee's book, big fan at the time, which they were all into patterns and stuff. And yeah, I shorted pretty close to that apex, and the market tumbled all the way down in 2002, and I was pretty much short most of that time going in. We had some violent rallies back, but yeah, it took a while. Tops take a lot more time. They don't make usually just a spike top. They go up and test those tops a couple, 3 times, and finally the market kind of just gives up. Volume dries up. So that's what may happen here. This could be a top building pattern where market falls back, comes back again, tries to rally up through the June 8th high. So, but bottoms they just blow out, totally. So it'll be interesting. Maybe we build a top here for the next couple of weeks or so. But it'll be interesting to see.
I just kind of vaguely remember it was like 6 months or 9 months of it just kind of beating out the top. I want to thank you for being on the show today. We're going to have you back in a couple of weeks. You can always find Tim at ord-oracle.com. If you want his charts, you can email me at path@tfnn.com, and we'll get those out to you. Thanks again, Tim.
All right. We'll see you in a couple of weeks.
Okay, bye.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we see Mike called in from Niagara Falls just as we were getting ready to put Tim on. So maybe this is a good time. If you're still listening, give us a call at 877-927-6648. In the meantime, we have several questions already. So we will do that. Anyway, first question, what are options is telling us on Netflix? As I said, everybody's kind of gotten way out. They're not wanting to go much in the way of pointing to a direction. My guess is this is going to be a pretty decent pop tonight on Netflix, maybe back up to that 575. And then we're going to start seeing the reduction of new subscribers all through the fall. So this may even hold up into the next earnings cycle. But at that point, I suspect the overhang or the hangover of watching all the Netflix stuff will probably get people to start looking at new things like the Peacock Network, maybe Disney, if they haven't already had it. I suspect they're going to start jumping around to some of them, but probably Netflix still looks like it's doing well. I haven't heard a lot of people say that they are canceling it, but my guess is that they're going to be so sick of this, especially with the last round of reclosings, that you're just going to watch everything that you ever wanted to watch on it, and it's going to take them 6 months or a year to get that kind of content back. I just don't think we've reached that tipping point just quite yet. But it could be one more nice day. Certainly looks like it from what I'm watching in options. The volume in the markets, not a lot of volume to the upside, not a lot of volume to the downside. Could we just kind of tap dance into the middle of next week where those big, huge BMOS of the NASDAQ come? Certainly, they took a lot off the table already this week, and it's unclear whether some of that had to do with options expiration or just the frothiness of what we already saw in those. But let's go through the rest of them here real quick. Microsoft down just a little bit, but again, volume not all that exciting, just kind of hanging on to the low of 2 days ago. But you're at about 205. Options are showing like 210, so maybe you get a $5 bounce tomorrow if the news come out okay. Maybe something like that. I think for the most part, we continue to see a lot of people rotating out of the stocks that they've been in, i.e. these FANG stocks, and continue to start going into things like the smaller and mid-cap stocks with the Russell. Of course, we were up, 3 or 4% yesterday. We've given back about 0.8% on the Russell today, and that's kind of the same. S&P's given back about 0.5%, Dow about 0.75%, along with the NASDAQ. So a lot, really, to this point. I don't have any other evidence, shows maybe a lot more of sector rotation and out of some of them and into some others. Question about Disney coming through my content. Okay. Yeah, you might get a little bit of side action, pin action, as they like to call it, on Wall Street because of the bowling analogy. Down on kind of light volume today. I don't think you have a clear shot. It's kind of hitting this resistance level at about 122. I don't know if you've got a whole lot in here. It's just, again, energies when it's up and down is 10%, something like that, and you're going into the summer, trading and volumes lighter. I really want to see something that's a bright signal, and this one's rather muted. There are no real clear signals on a lot of these big ones. Volume, it was up from the middle of, maybe the middle of June. It was into June. Was lighter, but you got to get lighter volumes anyway. It's not like it was half the volume on things like Disney and the rest. Question on Amazon. It kind of came off 300 points, but a lot of that was just frothiness too. Kind of amazing that the S&P has held up. So that money that did come out of stocks like the NASDAQ really did go back into other things, or you would have seen much bigger damages from these BMOS. But hanging around here at 3,000, maybe it just got a little bit too hot. But I don't see a lot of change in it from looking at the options for tomorrow. A lot of these stocks do look like they could just go sideways to maybe just slightly higher as we go into that. Okay, other questions out here. Do I see anything in GLD? Let's take a quick look. Okay. It's just hanging out here going sideways. You could make a case for distribution if volume was light, but generally it's a lot tighter than that. And literally you've got somebody within a dime or maybe a quarter. These are a little bit more volatile than that. Now, maybe it's a little bit more volatile than most stocks, but you hit the high, you had some nice volume, almost 12 million shares on that July 8th high in the GLD, and just kind of going sideways and filling that gap. Again, I think a lot of these stocks, like the ones I have, you just kind of have to sit on your hands, and until you get a good signal, just let them run if they're doing well. If they're parabolic, like a lot of those big FANG stocks were, like Amazon was, and you've blown off, you're probably going to take a little while to consolidate out. And again, just a huge move that we saw in the Russell is probably going to tell you a great deal more, and that is that people went out of the big stocks, they went into the smaller cap stocks, and that's probably because they're expecting those to be or have some more room left in them, where these things kind of probably have topped out for a little while in the NASDAQ. Another question, do I see a big change for tomorrow in Micron? It looks to me like they do want to pin this thing at 50 tomorrow. Again, a lot of these stocks, real kind of triangle formations with lower highs and higher lows. And this is a good example of that. I don't think that there's any reason to get into this one until it breaks out one way or the other. So, got that. Okay, got a minute left here. See if we can get to anything else. Question about W. Okay. Wayfair. Do I see any? I mean, you're up on light volume. See if I got anything else. It's 3 months. Let's go to 1 year here. I mean, you're pretty close. What you would like to see is a couple of days above the 9-day or 3x3, and then the next close under it. And that would open the door back down to 50. But again, Best thing to short this would be a big gap higher. We'll be back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Bam! David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And yeah, there's nothing better in Wayfair, if you're feeling bearish on this, to have one more gap up. This one probably as good as any looking in that textbook version of making a top, but one more gap higher. And I would be buying probably some long-term puts to the downside on it if you can get the right price. But we shall see. But yeah, one more gap higher. I don't know when earnings are on that, but let's look that up here quickly before the end of the really big shoe, which is right there. Okay. August 5th, so not that far away. Yeah, I wouldn't be pulling any trigger before earnings, and what are we now, 2 weeks away? It may not hang up here beautifully, but I'd still would wait till after you saw the earnings on this one. But one more gap higher, come on earnings. That may be a perfect time to start looking at something, and that may be the next big scenario for setting up some kind of high into August. But we shall see. Anyway, let's go back and take a look. The futures on gold, back under 1,800. So there's a little bit on that. The dollar index tried to take out 96. It's back up at 96.30. So we've got a lot of bouncing around, but really didn't stick to any one side. Question is whether or not gold is making some kind of long-term top here. I don't think so, but I think you're just kind of, a lot of these stocks that I'm in right now too kind of make it look like we're at the highs, but they're not really backing away that much. So I'm kind of still thinking on the side, we've got another week or two to go. We'll see some significant highs in the market. In the meantime, sell when you can, not when you have to, and we will be back here. Same bat channel, same bat time.